Hey folks, it's Vic Noble here with your weekly trade example for the week ending March the 15th, 2013. Actually, you know what? Before I get to this week's example, you know what I want to do? I want to express some gratitude. I think that's a good thing to do every single day, actually. Express some gratitude for something, and because we all have so much to be grateful for. And so today, I just want to say thank you to you. I really appreciate that you take the time to tune into these weekly trade talks, and I really hope that you do find them somewhat helpful in your trading. Whether you ever decide to come to work with me or with somebody else, or whatever you decide, these weekly examples are a great way for me to pay back a bit to a business that's been very good to me. So thank you. Okay, I want to talk today a bit about momentum in trading because in the past I've told you that in the Coach's Corner we mostly focus on momentum strategies because I think it makes sense that when you're swimming with the flow of the river, it's a heck of a lot easier than trying to swim upstream, right? And we hear momentum talked about all the time, but what does it really mean? Because it can actually be confusing. I mean, someone might say, well, I'm a momentum trader. Well, that's fine, but momentum is a relative term. And let me show you what I mean. I'm going to show you several different charts here, and let's see if you can identify the momentum on each one. So if I bring this up here, let's just look at this first one here. I just took a few screenshots here. This first chart's going down, pretty obviously heading down, right? You could say that the momentum is down on this chart. And how about this next one here? Well, it's the same thing. It's like it's fallen off of a cliff, right? What about this next one here? Oh, this one's heading up. Would you say that's heading up? The trend is up. Yeah. And the last one, same thing. It's heading up as well. Okay, so I think most people can pretty well see that kind of thing. Now let's get some perspective on this. Let's go back to this first chart here for a minute. This first chart is a weekly chart. This is a weekly chart. It's actually the British pound US dollar. And the next chart right here is a daily chart. Now, just based on these two charts, do you think the easier money was made going short or going long? Well, I think the answer is pretty obvious, right? So if you're it's all heading down here. If you're a longer term momentum trader, you want to be trading this thing short until proven otherwise by price. And even if you're day trading, the easier money is going to be made to the short side. Do you know we have a guy in the Coach's Corner, just as a sidebar here, he's been trading this pair short. He is now up 900 pips. I mean, that's approximate, by the way. I don't know exactly what it is at this very moment. It's in that ballpark. He was just telling us this last week. That's a long-term trader for you. But that's the momentum that he likes to trade. That suits him. Okay. Now the next chart, let me show this next chart. This chart that was going up, that's a 4-hour chart of the same pair, the British pound US dollar. If you're a short-term trader, like say you're a day trader, and you want more trades and you have the time to do that and you have the psychology to trade that way, you can get plenty of daily momentum trades that are counter to the longer term trades. Do you see what I mean? But I would really caution you that, if your preference is day trading, you want to at least see the 4-hour chart showing positive signs of, in this case, going up. Even though the bigger trend is down, you want to see at least the 4-hour heading up, and then you drop down to the lower time frame charts to find a momentum trading pattern, like it could be slingshots, MOFs, VIC trades, that kind of thing. There's the kind of things that we talk about in the Coach's Corner, just that are set up to trade in alignment with the indicated direction on this 4-hour chart. Now, you might think that you can't do as well day trading like this. Well, I got to tell you, you can do extremely well trading this way. The risk rewards are all relative. Okay, think about this. If you have risk in a trade of, say, 10 or even 15 pips, which we show all the time, you can imagine that you don't need very much of a run in price to achieve at least, say, a 2-to-1 reward to risk. We just had one guy show us a trade yesterday. It was over 5-to-1 reward to risk. Lots of 3-to-1. Some of them are a lot higher than that. But the point is this: it's vitally important for you to know what momentum means to you. But for whatever it is for you, what you want to do is you want to strive to get layers of time frames in your favor. Okay. Again, the past week in the Coach's Corner, one of the traders was able to spot, just to give you some contrast on this, entered a trade short on the Euro US dollar, which was in alignment with the fact that this pair has been in a pretty sustained downtrend since early February. And this trader did this by having an alignment of all the time frames in her favor, like right from the weekly chart on down. But she did the trade on a 5-minute chart. She took what's called a 5-minute MOF trade, which was also a pattern number 6, the VIC trade. Both momentum trades. These are momentum trades that are for day trading. Then, same trader goes long on the British pound US dollar pair. Let me just get this chart out here. right here, because of this action in here. This is today I got this from her, using a pattern number 6, the VIC trade, also a perfect 15-minute slingshot trade. So they fit very, very nicely together. But if you looked at the weekly and the daily charts, you'd say that the trend is down, that this is all heading down here, right? Okay. But all the charts from the 4-hour and lower right now are showing a different story for the time being anyway. So this whole trend may reassert itself. We don't know. Kind of interesting how we came up to this level here that I had marked, and look at this rejection. So we'll see what happens next week. So anyway, that's why this trade was taken long, because the 4-hour charts and lower were all showing momentum going up. It was a day trade, okay, not a longer term trade, and this one yielded just under 3-to-1 reward to risk. That's not bad. You risk 1%, you get a 3% return. You can't get that at the bank, right? Not even over several years these days. Okay, I'll leave it at that. I hope you get the idea behind perspectives on momentum. You need to decide, what kind of a trader you are. Okay, longer term, day trader, whatever it is, and wait till you get multiple time frames stacked in the same direction. Okay, really, really helps you out. The more you have in your favor, the stronger the momentum, right? Leave it at that. Thanks so much, you guys. I hope that helps, and you guys all have a great weekend. And I'll be back at the end of next week with another weekly trade example for you. Okay, take care.